Imagine checking your bank account and seeing $100,000 sitting there in cash. For many Australians, that's a huge financial milestone. It might have taken years of hard work, saving every paycheck, cutting back on expenses, or even receiving an inheritance. But once you've reached that point, another question appears. What should you actually do with the money? Surprisingly, this is where many Australians make costly mistakes. Some leave the money sitting in a regular savings account earning very little interest. Others rush into buying an investment property, invest everything in the share market at once, or spend a large chunk on a new car or lifestyle upgrades. The truth is that there isn't a one-size-fits-all answer, but there are smarter ways to put your money to work. The first thing to do is avoid making emotional decisions. Having $100,000 can make you feel wealthy, but if you don't have a plan, that money can disappear much faster than you think. Instead of asking, "What can I buy?" ask yourself, "How can this money improve my financial future?" Before investing a single dollar, make sure you have an emergency fund. Life is unpredictable. You could lose your job, face unexpected medical bills, or need urgent home or car repairs. A good rule of thumb is to keep 3 to 6 months of living expenses in an easily accessible high-interest savings account. That way, you won't have to sell investments or go into debt if something unexpected happens. The next step is to pay off any high-interest debt. If you're carrying credit card debt or expensive personal loans, clearing these should usually be your top priority. If your credit card charges 18% interest, paying it off gives you a guaranteed return that's difficult to match with any investment. After that, think about your financial goals. Are you saving for a home? Planning for retirement? Looking to build passive income? Your goals should determine where your money goes. If you're hoping to grow your wealth over the long term, investing in the share market can be a great option. Rather than trying to pick individual winning stocks, many Australians choose low-cost exchange-traded funds, or ETFs. These funds spread your money across hundreds or even thousands of companies, reducing your risk through diversification. Historically, share markets have delivered solid long-term returns, although values can rise and fall in the short term. Property is another popular investment in Australia. While $100,000 probably won't buy an investment property outright, it could be enough for a deposit on a home. Property can generate rental income and has the advantage of leverage, allowing you to borrow money from the bank to buy a larger asset. However, it's important to remember that owning property also comes with ongoing costs, including mortgage repayments, maintenance, insurance, council rates, and periods when the property may sit vacant.